Wall Street closes lower on Friday, although Dow Jones has now rallied for a fourth straight week. The tech-heavy Nasdaq too completes its best quarter since 2020. All eyes now on banking results due this week as the earnings season gains steam. Stocks in the Asia-Pacific trade largely lower. The adjusted SGX Nifty indicates a lower start for the Indian market after Friday's trading holiday. Crude settles higher, gains for the fourth straight week after the IEA says it expects demand to hit record highs in 2023, while deep output cuts could widen supply deficits. Finance Minister Nirmala Sitharaman says India may buy Russian crude over the price cap if cuts by the OPEC increase costs. Infosys reports a shocker of a fourth quarter. Earnings miss estimates on all France's margin and revenue decline. The software giant also gives a cautious guidance, says the outlook for the business remains uncertain. HDFC Bank shows strong growth in net interest income, while asset quality and net interest margin remain stable. Profit misses estimates as operating expenses remain elevated due to the branch expansion. Good morning. In the Mumbai News Center, I'm Sonal Bhutra and you're watching Power Breakfast. A fresh new week, a fresh new trading day as well, and we have a lot to catch up on after the long weekend. Earnings in our own markets and the weakness that we've been seeing in the global markets as well. So let's take a look at what the Asian markets are doing before we talk about all that. Largely lower in trade today. We actually have mixed cues, so to say. While the Hang Seng is up around 0.3%, we have Taiwanese index lower by 0.2%. Nikkei 2 is lower in trade by 0.1%. We have Kospi, which is higher, Straits Times also higher. So while we did get a weak handover from the Wall Street, Asian markets are largely higher right now. But if we take a look at the SGX Nifty and compare it with Thursday closing futures, we will see that yes, it is going to be a decline of around 100 points for our own markets, because that's the kind of move that we have seen. We'll compare it since Friday was a trading holiday, so we compare it with Thursday Nifty futures right now. That's about SGX Nifty and the Asian markets. Let's talk about the US markets now. Wall Street ended Friday's trading session lower, with the Dow Jones sliding over 100 points, the S&P 500 down about 9 points, and the Nasdaq Composite closing with a 43-point cut. The Dow, however, notched its fourth straight positive week, rising 1.2%. And the S&P added around 0.8% for the week, while the Nasdaq ticked higher by 0.3%. CNBC Seema Bodhi gets us a wrap of all the action on Wall Street.
Stocks finishing the week positive as investors mulled over a stronger than expected start to corporate earnings, but a weaker than expected retail sales report. The Dow closing down today, shedding over 100 points. S&P 500 also in negative territory. Tech-heavy Nasdaq ending 0.35% lower. JP Morgan kicking off earnings season with a bang. The bank stock soared more than 7% after it reported record first quarter revenue of around $39 billion, topping analyst expectations. Citigroup also saw shares pop nearly 5% as it beat estimates. Consumers tightened their purse strings last month. Retail sales fell 1% in March, the most since last November. Lower sales of autos and electronics drove the decline. The data adds to signs pointing to a cooling economy as consumers face higher interest rates and high inflation. Boeing shares tumbling nearly 6% after the company warned it will likely pause some deliveries of its 737 MAX planes in the near term. One of Boeing's suppliers informed the aircraft manufacturer of a quality issue among some of the fuselages in certain 737 models. This marks the latest in a string of production issues amid an industry-wide shortage of new planes. That's what's happening in the U.S. Back over to you in Mumbai.
Okay, thank you so much, Seema, for joining us with that update. Let's also listen into some important opinion coming in from Chicago Fed President Austin Goolsbee and BlackRock Chairman and CEO Larry Fink.
I think inflation is coming down. We've still got this. Is it a cloud? It's probably not a cloud anymore, but this issue of how much is coming from demand and how much from supply. You've seen the supply chain constraints easing across a lot of sectors, so that's been helping bring inflation down, but you've still got clear stickiness on some parts of the prices. There's no way you can look at current conditions around the world and in the U.S. and not think that some mild recession is definitely on the table as a possibility.
I believe inflation is going to be stickier for longer. In other words, I think we're going to have a 4-ish% floor in inflation. No, I don't see a big recession. I'm not even sure we're going to have a recession in 2023. We may have it early 24. It really depends on what is the pathway of inflation in the short run, what is the pathway of the Fed, and also, more importantly, how does this all play out in terms of credit and credit spreads, and what is that impact on regional banks and other asset owners? You know, we've seen over $500 billion of money leaving the banking system into the capital markets. And that's one of the pervasive things I talked about today. I talked about in my CEO letter, that we're seeing a acceleration of movement out of the banking system into the capital markets. And that continues on. You could ask the question, is that good or bad? We could all raise those questions. The large banks are benefiting from this. The large market-making banks are benefiting it, and the capital markets are benefiting from this. And that's going to be a big societal question. How do we want to navigate this? We still have 4,400 banks. Is that the proper size? Can they perform in this type of atmosphere?
Okay, that is some important opinion coming in on US markets, but that's a global market action. How will these cues impact our own markets? We have our research team joining in to tell you just that. The trade setup, the stocks that are likely to be in the news, and the action from the F&O space as well. Turning out to be an important day. We have big cues for our own markets as well, right? So, Ekta, let me come across to you first up. What is the market setup looking like today?
Hi, thanks for that. Well, overall, last couple of weeks, it's been positive for the markets. The markets posted gains for the third consecutive week as of last week. The markets, in fact, extended their gaining streak to 9 consecutive days as of Thursday. And it has been the longest gaining streak that we've seen all the way since October of 2020. We've all seen that the FIIs have been pumping in money in the past couple of trading sessions. So they net bought around 221.8 crores in Thursday's trade. DIIs net sold around 274 odd crores. But the big difference in today's trading session is the fact that Infosys disappointed. Remember that Infosys is already close to a 52-week low, but there could be a read-through that we could see for other IT stocks. As of Thursday, 4 out of the 5 top Nifty losers were in fact IT stocks on Thursday's trading session. If you see, TechM has in fact seen a brokerage downgrade which has come through. Infosys is a separate story, but the spillover effect is something that we need to monitor. Separately, HDFC Bank could probably negate some of the pain because the gross NPA ratios have come in at the lowest in 9 quarters. Financials, in fact, led the recovery on Thursday's trading session. ICICI Bank, HDFC Bank, in fact, were the top contributors, and the Nifty Bank was up nearly 3% last week. Now, globally, in terms of this setup, the US markets shed more than 100 points on Friday's trading session, but it was the 4th straight positive week that we saw. Asia is largely mixed at this point in time, something that you were pointing out, and Brent has gained as it's logged a weekly gain as of last week after the IEA has predicted record demand. As of now, the SGX is indicating a lower start. We also have a lot of cues from earnings this week, so that's going to be top of mind. No long weekend. We have 5 full trading sessions, and separately Angel One, Just Dial from the broader markets, HCL Tech, where there's been a resignation which has taken place, ICICI Bank, which will be important to watch, as well as a couple of others such as Tata Communication. So earnings is going to be top of mind. The read-through for IT and banks will be key.
Oh, yes, it will be. And we are so used to long weekends now, right? But you have to get used to a lot of earnings coming in as well. Ekta, thank you so much for all those cues. Going across to Vivek. Vivek, a lot of stocks in focus, but definitely Infosys tops the list.
Well, absolutely right. Infosys, post-Thursday, quite a few stocks, quite a few earnings that have come in. But, main focus today will be on Infosys. It's a miss on all counts versus what was the anticipated earnings. Now, when you're talking about the profitability, coming in slightly above the 6,120 crore mark, below the CNBC TV 18 poll. Revenue too missing. The bigger disappointment has been the EBIT margins coming in at 21%, a 50 basis points miss. And what has been the most negative surprise has been the constant currency revenue. Instead of a growth that was anticipated of between 0.5%, there's actually been a decline of 3.2%. HDFC Bank, was the other company that delivered its results. The profit and loss statements was marginally below the estimates. However, most of the other parameters remain quite healthy. It'll be interesting to see how HDFC Bank actually trades in today's session. Net profitability coming in at a little over 12,040 crore versus the poll of 12,152 crore. NI close to 23,351 crore. Gross LPA contracting at 1.12%. Net NPA2 contracting at 0.27%. Keep an eye out for Z Entertainment. A very large block deal is expected to happen in today's trading session. As per sources to us, we understand that Oppenheimer is looking to sell its complete 5.65% stake in the company. It's expected to be a clean-out trade, and the price range is at 199.8 to 208.15. That's the band that's been given. Interesting to see at what price the block deal happens today. Watch out for GTPL Hathway on the back of earnings. Slightly disappointing set of numbers. While revenues were up 13%, the company reported a loss of close to 107 crore. Keep an eye out for Wartech Wabag as well. The company has divested its entire stake in Switzerland operations, and Max Healthcare has gone ahead and acquired an additional 34% stake in Ecoa Healthcare for 69 crore.
Okay, all right. Vivek, thank you so much for that. A lot of stocks in focus today. Finally, let me go across to Nigel, joining with all the cues from the FNO space. Hey, Nigel.
Well, morning, Sonal. You know what a dream run it has been for our own markets. The FIs have been showing us the money for the last straight session, so they have turned the corner, it seems. And we are on a 9-session winning streak. Can we make it 10? Well, let's see whether or not that does happen. Now, effectively, the SGX Nifty is actually suggesting that we're likely to start off with a cut of around 80 to around, 100 points or thereabouts, because you need to compare the Nifty futures with the SGX Nifty. And adjusted number should be around 80 to around 100 points lower, primarily because of Infosys. What do the FIs do in the FNO market, though? They added some longs and they covered some short positioning. And that's really been the trend for the last few sessions. In fact, if you pull up for the last 1 month or so, when the FIs were aggressively net short, they had close to around 195,000 contracts net short. That's come down to less than 30,000 contracts net short. Also, if you look at the short positioning from more than 90%, it's come down closer to around 60%. So we've already seen a big short covering bounce. Now we'll need to watch the flows, and also whether the remainder of these shorts can cover out. What does the options data suggest? Well, the 17,800 put. That was very, very active before we went into this weekend. It added close to around 30 lakh shares odd, and the premium out there on average would be around 80 to around 90 rupees odd. Which brings us to the levels. For those that are writing the 17,800 put, well, they are hoping the 17,710 odd level holds out. And also the low that we saw on Thursday itself was 17,730. So that's a bit of a support zone. On the upside, the 100 DMA becomes a bit of a resistance, so keep an eye out on that front. The Nifty Bank as well, the 42,000 put, that was very, very active in Thursday's trading session. And on the downside, the key level to track will be around that 41,700 because the 100 DMA comes out there. The SGX Nifty suggesting a bit of a downtick. The buy on dip thesis will get tested today. Let's see whether or not we can make it 10 straight sessions in a row. Back to you, Sonal.
Well, it'll be interesting to watch, right? Thank you, Nigel, Vivek and Ekta, for joining us and prepping us up for this very crucial trading day ahead. Time for a break now. When we return, Infosys and HDFC Bank reported their fourth quarter numbers. We'll get you an analysis on the other side. Stay tuned. Welcome back. You're still tuned into Power Breakfast on CNBC TV 18. Let's quickly take a look at the Asian markets, because remember, SGX Nifty is indicating a sharply lower start for our own markets. We've seen 9 consecutive sessions of gains. Today could be the day when that could reverse, primarily because of Infosys. Infosys ADR was sharply lower in trade over the weekend, and that is something that could have an impact on our own markets as well, as it is suggesting, SGX Nifty, that the downtick could be of around 100 odd points if we compare it with Nifty futures as on Thursday. So largely lower for the Asian markets. And moving on and talking about the impact that Infosys numbers will have on our own markets today. Delivered a weak number, shocked the street with an all-round miss. Rima is here with the earnings fine print. Rima?
It's a big miss on all fronts. The Infosys ADR was down nearly 10% on Thursday, and it followed it up with a 1.5% cut on Friday. So this morning, brace yourself for a big knock on Infosys. Now, revenues and margins missed the mark by a wide margin. Constant currency revenue growth for Infosys declined by 3.2%. Margins also fell by 50 basis points versus expectations of flat margins. Both these numbers are also weaker than what TCS had clocked in. The revenue this time, minus 3.2%, is much worse than what we had seen even during the COVID hit quarters. The reason for the decline in revenues in the March quarter is because of unplanned project ramp downs across verticals. Not just BFSI, but even other verticals like retail, high-tech got impacted, and there were also a one-time impact from project cancellations. Remember, when we spoke to the TCS management on numbers, they said there were no project cancellations. Projects were only paused or deferred. But in the case of Infy, it appears that projects have also been cancelled. And despite the environment stabilizing in the month of March, the outlook is still very uncertain, which is why the company has guided for a very muted year. Revenue growth of just 4 to 7%, and margin range has also been brought down to 20 to 22%. Brokerages have slashed down EPS estimates, many downgrades coming in, picking up a few. CLSA has downgraded it from a buy to an outperform, target price down to 1,550, and target multiple is down to 21. Nomura downgrades it to a neutral. JP Morgan has anyway been bearish on the IT pack. They further downgraded Infosys to an underweight, and their target price is at 1,200, and Citi too has lowered its rating to a neutral. So a slew of brokerage downgrades, and remember, Infy amongst the pack was pretty much a consensus overweight because its valuations relative to TCS were attractive. It was growing at a fast pace. So institutions were overweight on Infosys, but now you are seeing downgrades coming through, and we could expect a weak start for Infosys. Back to you.
Thank you so much for that analysis, Reema. So Infosys definitely on our radar today. In fact, my colleague Ritu Singh caught up with the CEO of Infosys, Salil Parekh, and spoke to her regarding weak revenue growth and weaker guidance and ramp downs in the month of March. Let's listen in.
For the quarter Q4, what we saw is during the quarter, there were some clients where we saw ramp downs, and then there were some areas where we saw one-time situations. The bulk of the impact in the quarter was from the ramp downs that we saw during the quarter. There are two aspects to it. So one, on the ramp downs, there has been with some clients in the telco sector, in the high-tech sector, in retail, and in financial services, in mortgages, asset management, and investment banking. So those ramp downs, we saw some stabilization in March, but the demand environment is uncertain.
Okay, with that, let's move on from IT to banks. HDFC Bank also reported its fourth quarter numbers on Saturday. Abhishek Kothari is joining us with the highlights.
Well, the bank has been building its strong base for future tractions. The cost is being incurred right now in terms of OPEX. However, the quality remains impeccable. What works in the result is that despite rising cost of fund, net interest margin has remained stable, and NII growth on a YY basis is strong. The slippage ratio of 1.2% is perhaps the lowest in last 6 quarters and second lowest in last 31 quarters. So asset quality remains one of the best in the industry. Gross NPA ratio continues to improve and is the lowest in last 9 quarters. ROA remains robust at more than 2%, 2.12% over there, with PCR ratio also improving, that is provision coverage ratio also improving to more than 75%, which is the best in last 9 quarters. Risk weight, assets to advances ratio is the lowest in last 4 quarters and second lowest in last 17 quarters or more. So the growth is coming from, high quality portfolio and not the risky profile business segments. Restructured book is at a mere 0.3%, perhaps the lowest in last 10 quarters. HDB Financial has reported highest ever quarterly PAT, along with the fact that their gross NPA ratio in HDB Financial is the lowest in last 9 quarters. What has not worked in the result? The OPEX remains elevated. They continue to expand their branches, and the cost to income ratio is the highest in last 25 quarters, coming in at 42%. CASA growth is lower than deposit growth, and corporate loan growth is also on the lower side when compared to overall loan growth on a YY basis. PNL, both in terms of NI and PAT, is slightly below our poll. Back to you.
Okay, with that, we'll slip into a short break now. Up next, we'll get you the cues from the commodities market. Stay tuned for that. Welcome back. You're still tuned into Power Breakfast on CNBC TV 18. Well, we spoke about the equity markets and a lot more. It's time to talk about commodities. Manisha Gupta, as always, is joining us with the update from that space. Hey, Manisha, good morning.
Hey, morning, and thank you for that. The markets are reacting to the strong Chinese trade data that we have seen in the previous week, and now it's going to be about the first quarter GDP numbers that China comes out within tomorrow. So between both of these, we have seen some strength come in for commodities. The crude oil prices, even though off its highs, are still trading near 1 month high, and we have seen 8% of gains come in for the month of April already for crude. Now, OPEC, while has flagged downside risk to the summer oil demand and justifying their output cuts as well, but the markets are really watching out for the Chinese crude oil imports in the month of March, which ran up by 22.5%. This is the highest since June 2020, by the way, and is the reason you still have $80 holding for the crude prices there. Also, the oil exports from Iraq to Turkey port are now halted for 3 weeks, and this is the 4th straight week that we are starting right now. That continues to add premium to prices also. When you look at the metal prices, well, gold fell 2% on Friday on hawkish U.S. Fed official comments, but the markets believe that gold is the place to stay invested in. The second half of this year could be quite bullish for this one. On the other side, you have copper prices now firm on strong China trade data. Also, higher domestic production and consumption in China continues to support this one metal in the Asian markets today as well.
Okay, so bullish cues as far as the crude markets are concerned. Thank you, Manisha, for joining us. And moving on to some somber news now. In yet another incident of gun violence in the United States, at least 4 people have been killed and 28 wounded in mass shooting at a teenager's birthday party in the state of Alabama. So far, there has been no official word on what led to the tragedy. The shooting is the 3rd high-profile instance of gun violence after the recent mass shootings in Tennessee and Kentucky. U.S. President Joe Biden described the latest incident as outrageous and unacceptable and reiterated calls for the Congress to pass gun control measures. Okay, all right. On that note, we'll take your leave on this edition of Power Breakfast, but do stay tuned. All the market updates on Bazaar Morning Call that comes up next.